Hey guys, what's up? Welcome to this video. It's your boy Sammy. In today's video, I'm going to be talking about bullish engulfing candlestick chart pattern. Now, what is bullish engulfing candlestick chart pattern is what we're going to be discussing in this video. When and where do we find it in the chart that we can use as an opportunity to place what an entry in the market, and what does this whole candlestick comprises of? Now, first of all, let's move on to what identifying what each of these candles are saying. The first takeaway I need you to take is the bullish engulfing candlestick chart pattern is not actually effective without two candles being in place. Okay, let's go to the next slide. So I'll show you what I mean. Now, if you look closely very well, you will see that we have two candles, a bearish candle and a bullish candle. Now, these two candles is what tells us who is in charge momentarily, in the sense that it tells us who is dominating the market as at that time. So that tells us what to do after what the candle closes. Now, another thing you need to be aware of is one of the things that beginners should do is they don't allow the candlestick to close before actually placing that trade. Now, this is wrong. Now, I advise also that if you see this thing happen in the higher time frame, like the 4 hours and the 1 hour, it is always good and advantageous to go to the lower time frame to confirm your entry before placing the trade. It will be very disastrous for you to go into place an entry trigger in the higher time frame because you saw this thing happen. You're going to be risking more, because why? The pips calculation there is going to be up to maybe 70 or 60 and above pips, rather than going to the lower time frame that will give you something like 10 to 20 pips risk reward. So let's get to understand what this thing is about. The first thing you will notice is the bearish candle. Now, bearish candle here, the price opens here because it is bearish. It means short position. It means we are selling. So at this point, the market opens here and closes here. It closes here. Now, what happened here? The price opened here. Sellers took the price to what? Downside and closed lower. Now, this means that the sellers are in charge momentarily. Now, we don't classify this. The mistake that traders make is that they're going to be placing a trade here. Let me take this out. They're going to be placing a trade here and start selling down. You're going to be wrong, because why? The market will give you a red flag and stop you out in the market at the same time. So let's move to the next candlestick. We'll notice something here. Price open here and closed above. Opening price of buyers, the closing price of buyers at the stop here. So now what happened here? You'll notice closely very well that this bullish candle engulfed here. Let's move to the next slide so I will just explain this clearly. You will notice that this bullish candle engulfed the bearish. What does this mean? It shows that the buyers are now in charge momentarily, because why? The sellers were in charge selling to the downside, and all of a sudden we got buyers taking price to what? The upside. So what does this mean? What does this show? I said the first thing we need to be aware of is that the candlestick involved two. One has to engulf the other, which is now buyers engulfing this, which is bullish engulfing. Bullish simply means the market we are going long, buyers are in charge, while bearish means to sell. So the first candle that actually opened was the bearish candle, and the next one that opened next to it was the bullish candle. And what happened? Price covered this, the bullish candle covered this. This is a good signal for us to place what? An entry to take price to the upside. Now let's move to the next slide so I will show you where to execute this trade. Now, we don't just place trade anyhow the way we want. We identify also with what price is doing and what the market is saying. Okay, now if you look closely here, you will notice something, a double bottom. Notice that when price came here, this candle did not engulf this one, so double bottom, the market was bearish. Okay, market was bearish. So what did we see happen? If you look closely here, you see that this bullish candle engulfed this one. Okay, when the market was bearish, actually the bullish candle engulfed this one, which shows that the market is actually what? reversing, buyers are now dominating the market. And how do we confirm that? We see this as a double bottom. If you haven't watched the video where I talked about double bottom candlestick chart pattern, double bottom chart patterns, I would also recommend that you go check the video out. Okay, this will give you a good hands on how to place your trade and know what to do next. So like I said, we get a confirmation here, the double bottom here. So price is now giving us an opportunity to take price to the upside. So we are clear on this. So this is a good position to place your buys. Why are we placing our buys? We are placing it because we saw a confirmation on the double bottom, here, which shows reversal of what pattern. The market is about to reverse from bearish, which it was, to bullish. And now the next confirmation we saw was that the bullish candle actually engulfed the bearish at this zone here. So our stop loss will be here and our entry will be here for us to write price to the upside. If you get any value from this video, we'd like you to subscribe, like, and leave a comment in the section below. If you want us to talk about other candlestick like morning star, doji candlestick, and spring candlesticks, and other form of candlesticks, we would like you to leave a comment in the section below on the particular candlestick they're giving you an issue to understand, so we can just give attention to it. That'll be all for now. Thank you.